Time now for today's business news. We're joined by Yuka Roya. Yuka, Argentina has avoided defaulting on its debt repayment.
Buenos Aires has reached a deal with its international creditors to avoid defaulting on about $2.4 billion worth of debt repayment when a grace period would have expired at the end of July. Instead, it will pay just a fraction of that amount in the short term and the rest later on. Catherine Viet has more.
A sigh of relief in Buenos Aires after the government negotiated a deal to avoid defaulting on its debt repayment. Argentina was expected to pay $2.4 billion by the end of July, but now it will pay just $430 million, with the rest to come later. The country's economy minister praised the deal.
Paying that amount would have been a blow to our international reserves and therefore would have generated more exchange rate instability and more macroeconomic instability in general.
Argentina will now have until March to repay the remainder of the debt to the so-called Paris Club of Creditors, which includes the U.S., Germany, Japan, and France. This follows last year's successful restructuring of some $65 billion in debt owed to private creditors. The deal will provide some breathing room for the country's struggling economy, which has been in a recession since 2018, a situation only made worse by the coronavirus pandemic. Last year, GDP fell nearly 10%, and annual inflation is running at almost 49%. Meanwhile, Argentina is still in talks with the International Monetary Fund about repaying the $45 billion it was loaned under the previous government in 2018.
Well, the head of the US Federal Reserve gave his reassurances that the recent rise in inflation would only be temporary and will wane. Not everyone, though, Yuka, seems convinced.
Well, there have been a lot of jitters lately since consumer prices in the United States jumped 5% last month compared to a year earlier. Now, Jerome Powell told Congress that he believed the high inflation levels that we were seeing were linked to the post-lockdown economic reopening and would settle closer to the long-term goal of around 2%. A market analyst earlier told us in our program that there's doubt over whether Powell's official comments give the whole picture.
Despite Powell's reassurances, I think the Fed dot plot that we saw from last week's meeting tells us a different story. I mean, the fact that enough of Powell's colleagues are penciling in not just one, but two U.S. interest rate hikes by 2023 is in stark contrast to the expectations that we had coming into this year. So I think market participants are now viewing the Fed's commentary with a new lens, so to speak, given what we have learned from last week's Fed meeting.
Well, despite those lingering doubts, financial markets have welcomed Powell's remarks. Here in Europe, major indices started trading on a positive note, tracking Wall Street. FTSE up 0.25% at the open. On the French market, Pernod Ricard rose 4% at the open after upgrading their financial outlook for the current year. Earlier, Asian markets also gained. Hong Kong shares recovered from Tuesday's loss, up around 1.5%. Tokyo falling just below the flat line towards the end of trading, but that comes after a 3% rise in the previous session.
Moving on now to a controversial move by the world's largest investment bank.
Morgan Stanley, the bank, has reportedly decided not to allow staff and clients to enter its New York offices unless they're fully vaccinated. Employees who are not fully immunized will have to work remotely. The new policy will come into effect next month, and in return, some COVID restrictions that are currently in place are expected to be lifted. It comes just days after the bank's CEO called on staff to come back to the office.
Meanwhile, the European Union is moving ahead with its €750 billion coronavirus recovery fund.
Well, Germany and Italy have been approved to receive emergency aid now that their spending plans have met EU requirements for digital and green investment. Italy will receive €191 billion in a mix of grants and loans. That's the largest slice among the bloc. Germany will be getting around €26 billion. The two nations join Spain, Portugal, Greece and Denmark, which have already received the green light from the Commission for their requests. Let's take a listen to the Commission's head, Ursula von der Leyen.
You have helped each other make it through the crisis. And by doing so, You have inspired a whole continent. You showed the true meaning of the word solidarity. And the rest of Europe is following your way. Next Generation EU is an exceptional response to an exceptional crisis. And it can reshape our continent for decades ahead.
Well, von der Leyen is actually currently on a tour of Europe, around those nations that have requested the aid from the European Union, including France. She will be in Paris today, later on, to discuss COVID recovery with President Emmanuel Macron.
Yuka Royer with our business update. Thanks indeed for that.